Okay, let's jump in to see what happened on Friday to CONY and MSTY. Let's start with CONY. So CONY had a good day. CONY was down slightly. I say a good day because we were able to close out our weeklies. But I'll tell you exactly what all they did. So we closed at 28.01. That was down 9 cents, which represented a 0.32% decline. And we look at our underlying tracking asset, which is coin for Coinbase. That closed down 6.5 points from 262 to 255.51. So it retraced about 2.48%. So that all happened on Friday, and we closed out our weeklies. And those were closed out at 3.25. Now it's kind of interesting. I commented in one of my earlier videos. I was a little frustrated with the CONY fund managers because, as most of you recall, the crypto-oriented yield max funds, which are MSTY, that track MicroStrategy or MSTR, and CONY, which tracks coin for Coinbase, all had a sell-off this week. So with on Tuesday, I looked in live trading and I saw we could buy back this 257.50 strike price naked call that we sold for $4.50 at $1. And I thought, well, why not take it off the table, right? That gives you a $3.50 profit. Whereas this thing could go to 20 or 30 or $50. You make money on your synthetics because coin is going up, but you lose money on your weekly call. So I wanted to win on the weekly call. And so what they did was they bought back 545 of them yesterday on 3/21 for $14.45 rounded. So we lost about 500,000 on that, but luckily yesterday, most of the day, it stayed below 257. So the market makers kept the premium on since it was so close. Had it dropped down to 230 or 220 on coin, they could have bought it back for pennies, or waited till the very end of the day and they probably could have bought it back for a penny. But needless to say, because it closed at 255.51, which is under, but they bought it back for 3.25, so that netted us about 1.3 million, I think. The debit versus that, well, actually it's a little more than that. So I was happy, but it's only really a fourth of the profit, right? We sold for 4.5 and bought back for 3.25, so only made about 25 or 30% of the potential. And they were lucky, quite frankly, to pull that off. Okay, let's see what else happened. They also, since they closed this weekly call, they went out and instituted a new weekly call, and you can see that here. This is where we closed out the one for the week of 3/22. So we went in and added 14,775 contracts at 267.50. So interesting that they chose this, which out of the money is only 4.69. So maybe they have a feeling, a bearish bent. And if we have another week like last week where we're slightly down, they're going to pick up all of that premium. There's only 4 trading days in the week with Good Friday on the 29th, with all the markets are closed. So anyway, we issued that. We collected 11.4 million. We sold those at $7.75. So the real key would be able to keep all that product. But doing that, it gave our running total cash, actually we're negative in cash that we kept because we moved it around the treasuries. But it gives our short call income, or income that's available to be paid in the dividends, into a positive. So that was good. Let's go and look at our actives. So our active position with this being put on is the 14,775 at 265, 4.69% out of the money. So if coin were to take off 10 or 15% in the 4 days, then we would have to pay a lot of money to buy these back. That's the negative. But our synthetics would start doing better, which, speaking of our synthetics, they're at 255. So we're barely above the synthetic, and we could make 9 million, okay, if we closed out of that position right now, and we stand to make a lot more money, but we have till April 19th on our synthetics. So we have 14,775 synthetic long stock, combination of bought calls and sold puts. Our March profits, because nothing's closed on this synthetics, is still 6.4 million, 6.368. Let's see, we talked about that. I can go over and I update these on the cash position. So they're still holding negative cash, which means they've closed out different positions, sold, and they just haven't moved cash around so that they're not a negative. What was the change on a daily basis? Negative 268,000. I don't read a lot into that. We'll go over the holdings at the end. Actually, we can go there now. So if we look at our treasuries and also the First American Government Fund, our two synthetics, the call 250 and the put 250, at the 1700, I'm thinking MSTY, at the 250 strike price. Our cash is pretty substantial here that we're holding, although it's still a negative. That just means they haven't settled the cash into the treasuries yet, or the First American Government Fund. The net assets showed us at $28, so we're basically valued at a penny less than the closing price. It's just a way to justify the price and see if it's a discount, or sometimes it'll vary by 3 or 4 cents. So that's in our favor right now. Let's take a look at one of the keys, and that's the cash flow. This is what determines really our payout. So our synthetic, nothing's changed here except on the short call income. What did the short call mean? Short call means the weeklies, where we sell calls without owning the stock, and we either make money if we buy them back for less than we sold them for, or if they expire worthless, which is optimal. Basically, then we make 100%, right? So we wrote in the active tab, we wrote in the March tab almost 11.5 million. Basically $7.75 times 14,775 times another 100, because each of these contracts is 100 shares. So that's how the math is done, right? This number times 100, which gives you the credit, right? But it's a credit in the sense we haven't earned it. It's a placeholder, right? We're given the cash, we just haven't settled it. So it isn't money that they can pay you out in dividends or do anything. But we're only talking 4 days, right? This will all happen well before our dividend, which I think is April 3rd for declaration. So let's go back and take a look. We talked about the holdings. Let's look at the payments again that I started. So our share count went down. I always try and make a note. They sold 259,000 shares. They didn't do it. In other words, people sold their shares thinking that it's going to drop and they can buy them back cheaper, or they needed the money for something else. So bottom line, the fund managers have to do things, you know, in that situation. Whereas when a bunch of people buy in, they have to put on more positions to spend that money. They don't want to have all their money sitting in cash because they're shooting for 60, 70, 80% annualized dividend return. So let's look at the payments again. So what could happen, and I did this for Misty, but I haven't done it here, so I apologize for that. But you'll see it in Misty because we've got such a big potential payout. So right now, when we go across, our shares dropped, and we now have $6.07 available for dividend payout. Would they pay all that out? Highly unlikely. I don't think there's been the highest dividend that I'm aware of was the 269. I know going back since around September on the fund, they had a 250, I believe. I think this is very close to being the low 103, and then there was this 107. So my best guess is $2 range. Could set a new high. It could be 280. Could be $2, it could be 250. I'd be disappointed if it wasn't $2. You say, well, why wouldn't they pay it all? Because they like to hold back some if they have a terrible month, right? If they don't win on weeklies and they lose on their synthetics, although I can't see how they wouldn't win on some weeklies if they were losing on the synthetics. Because you can simply write that call, and if the price drops, you collect all that premium. When it drops a lot, you lose money on the synthetic, which is a bet that's further out. So one usually offsets the other. That's why on the upside we get capped, and technically on the downside we have some protection. We're still going to go down, but we're not going to go down as much as the underlying asset because we've written the weekly calls and can collect that premium even if everything's going down. Okay, so good week, good position. Other than what I say, I don't know why the fund managers, I think it's Zega Capital with Jay Petroselli, who probably is doing all these Yield Max and other customers. I'm sure he has people helping, but I think somebody missed the ball on buying that back for $1 in 2 days, because they could have written another short 3-day call and potentially profited on that. So I guess I'm not looking for perfection, but I am looking to make the most I can. I'm happy with a $2 payout, because that's huge annualized, right? $2 payout times 12 is $24. The fund's only, trading at $28, and I think I bought in around 22. So let's take a look at Misty. That's next. Let me close this out, and here is Misty. Okay, let's take a look and see what transpired here. So we had a great week in that MSTR had traded down, was well below our weeklies. So look at these weeklies. Let me show you here here's our batch of weeklies. The 3 1850s, and you see the contract counts, and the 1785. So by closing at 1523 and being well below, I think the high was in the 1600s. They did have 50,000 shares added. So we went from 775 to 825. So look at these buybacks, 9 cents, 9 cents, 9 cents, 15 cents. Look at how much they sold these for. 157, 147. So here's 188,000 profit. Here's 739,000 profit. This is 1.671 million profit. Another 99,000. So we had, 2.6 million that we added to the kitty there in these weeklies. We also sold a new weekly, okay, and we sold it at two different prices. So we went and we sold 1800s, right? So basically, whenever you sell your weeklies and you buy them out at the end of the week, sometimes you buy them out earlier, like I was saying on CONY, they should have, but by buying those out, they basically have to go put new ones on. Well, we only have 4 trading days. So again, they're anticipating a potential movement in MSTR, MicroStrategy. They went out 18.90% above the current price. So we can go look at the active. And here's those 188 contracts. They wrote 21 and 167, and they sold them at just a hair difference in the price. I can go back and show you. They sold 21 at $46.65. They sold 165 at $47.09. So they batched them, but they went at the same strike price, right? They put all their eggs in one basket, 18.9% out of the money. Now let's take a look at that. Whoops, I didn't do my math very well there. It's not 84%. That's got to be B11 there. Whoops. I'll fix that later, but we know what the numbers should be. The numbers should be a B2 by A11. Oops. Okay, so I need to reverse that. A11 divided by B2. Oh, that's what happened. It's the 118, but it's really when you put it in percentages. So let me fix that. B2, A11, and make that percentage. It is in percentage. Okay. So, but it should be the 18.19. I'll have to figure out what I did wrong in that. Okay. So let's take a look. So we're 18.19% away because we're down at 1523. We can go all the way to 1800 in 4 days, and basically they expire worthless. So it's a substantial amount of money that we stand to gain. The MSTY price is at 38.10. So what does that represent to us? We're capped, right? Once we go above an 18.19% gain, then we can't make any more money. But we can, if we make all of that money by staying below, we're going to earn $6.93. MicroStrategy's earnings are estimated on May 6th, so we got a ways to go there. We've got the BTC halving around the 16th to the 19th of April. Again, I'm bullish, but we got to expect continued volatility. This pullback was kind of easy to see, and it may not be over yet. We could have another week before we take off again. Here's a chart. I tried to do a 3-month chart. So the black is MSTR, right, because it has a long history. We only started February 21st. So not bad at all when you look at MSTY compared to MicroStrategy. Look at the volume. Look at this volume that surged in come March, which has also led to usually volume precedes price, and you see it here, but it can go hand in hand. A lot of times you see large volume and you see small price, and then all of a sudden the price just blows out. So let's take a look at the thing that really matters. Well, let's go over holdings. All right. So we've got our two treasuries. Here's our 1700, our synthetics. Okay, and we're under the money on those. Okay, so we'd have to pay 3.3 million to close those out right now, because, but again, that's paper money. We have till April 19th. We have 188, and the puts are worth more than the calls. We buy the calls and sell the puts, so we want the top number to be bigger, right? We want to sell for a big profit when it runs and not have to do anything with the puts, let them expire worthless, right? We sold them, and as long as we're above that strike price. So, but we have collected 1.9 million so far. So again, this is paper money. They can't pay us on that. It's a debt obligation. Okay, so finishing up, now I can go to holdings. So this is just a summary of those. The new calls, right? We sold at 32.5. So we sold 188 at 32.5. So that's 611,000. Our cash is 18 million, mainly because we rolled those 950s into the 1700s. Let's take a look on our payments. This is the golden goose. So I was all excited yesterday. I apologized today. Had a few drinks last night to celebrate. My fund's doing well. So we're still at 8.9 million here. Our short call income, which are the weeklies, has jumped to 1,042,000. So just in the short call alone, they could pay us $1.26. And on the total, how much is available for all of it is $12.11. Again, they did add 50,000 shares. So 50,000 more shares were bought, probably because they saw what happened the day before enrolling the 950s. So look at how insane this gets. So are they going to pay $12.11? Absolutely not. You know, this is really debatable. I don't even think they'll pay 6. Would I love to see them pay 6? Yeah, that would be fantastic. I think it's somewhere 3, 4, 5, or 6. I'm hoping it's 6. Let's see. Okay, but let's talk about what's that on an annual return. Well, $12.11 in 1 month times 12 months gets you to $145, right? Depends on where you bought. I mean, I bought in under $25. Some of you that bought on the first day were under $21, right? And some of you could be at 40 or 41 at some of the highs. I think we actually hit 42 the other day. So the MSTY price is $38.10. At $145 in dividend return, that's 381% return. Just unbelievable. So anyway, that's crypto. That's where it is. I did get some news in talking to the YieldMax folks that there's some potential long or short stock synthetic planned ETFs. And I sort of welcome that because I think there's a turn in the market sometime in April, maybe toward the end of April, it could be early, where some of these NASDAQ flyers, NVIDIA, some of the, if you own those funds, I apologize, but when you have these funds that are long stock synthetics only, you only make money when the stock is moving up. Okay, when it's moving down, you make a little bit on your weeklies and you lose a lot on your synthetics. Just look at the guys in Tesla that's tracking Tesla. I mean, that fund when it started was $20, which all the funds started $20. I think it went down to $13 because this, underlying asset, Tesla went from, $200 down to $130 or something. I think my numbers are right. And so all of a sudden, dividend income doesn't mean that much when your underlying capital asset. It would be like if Misty was $10 and I was telling you they're paying $4 a month. You're like, yeah, but I lost $10 from what I paid for the stock at 20. So if you can make both, it's fantastic. But when you have a strategy of only long stock synthetics and weekly calls, you're capped from a stock that's just going to double and triple and quadruple. Okay, but you do get dividend income, but you block or you get aided in the downside a little bit. But what you want is when you see negativity in the market and you can't afford on your own liability from a margin call, go out and short an Nvidia or a MicroStrategy or just whoever you want to short. So the thing that you can do is have some funds that are short. So think of YieldMax as a single stock fund that sells calls and buys puts. It does the exact opposite of what their strategy is now. So there could be a time when that's useful. When you feel the market's going to go against you, you still are not go against you, but that stock is likely to go down or that sector is likely to go down, which I think is inevitable in the NASDAQ stocks for a while. But timing, it's not perfect. But just hearing that they're likely coming from the YieldMax folks, I was really excited about that. Okay, hey, that's all I got for you today. Subscribe, like, comment. Please tell me in the comments what you want to see, what you want to learn about. I talk a lot about these calls and how they're put on and how they work. I did a basic option, little class video, but it doesn't help you on these sophisticated ones. So if I can educate you more or do more things, let me know what you want to hear. Again, I'm not a licensed financial professional. This is not financial advice. It's for education and fun. So enjoy. See you all later. Bye for now.